From our studios this week in Orlando and Tampa, this is Green Tag Theme Park in 30. I'm Philip, and I'm joined, as always, by my co-host Scott Swenson of Scott Swenson Creative Development. On Green Tag, we look at the week's top news and explain why it matters to theme park professionals. And this week, we're going to do a little bit of an update on the Six Flags saga, because at this point, of course, we have to. We're going to go into Disney earnings, and we're going to talk about the latest sale and acquisition in the theme park world. So,
but before we do that, we're going to turn to all of you, because our last episode got tons and tons of comments, and we really appreciate that. I'm hoping that as you comment, you go ahead and subscribe so that you can continue to comment, because Philip and I were just talking before we started recording that this is the reason we started Green Tag, was to start conversations within the realm of the industry professional. And it's happening, and we're so excited about it, because people, whether they agree with what we said or didn't agree with what we said, or they have their own perspective, or they're in agreement, but they're saying, but taking this into consideration. All of these kinds of comments are so incredibly valuable. And the fact that they're starting conversations within the comment streams themselves, that's what's most exciting to me, because it's not coming back necessarily to something that we have to respond to. It's letting professionals talk with professionals. It's basically creating an online networking environment that is prompted by what we do in our weekly shows. So we wanted to kind of, first of all, thank you for those kinds of comments, and thank you for becoming subscribers, and encouraging you, if you have not become a subscriber, to become a subscriber. But we also wanted to focus on some trends, quote unquote, within within the comments from last week. And Philip, of course, tracks these like a professional, like the professional that he is. So what are people saying, Philip?
Yeah. So I do read every comment. I may not reply to any of them yet. After I will get there. But I think there was a lot of discussion about all the different topics last year, about Six Flags, about United Parks, about the Busch Gardens parks. And on the Six Flags front, it seems like most everybody in the comments are not happy with the current operations. However, a lot of people did point out that people who knew how mergers work saw this coming a mile away. And that was from Project Storm 1999, which I think is a good point, right? I think when Scott and I were talking last week, we didn't really put this in the context of mergers. Like, mergers don't always succeed, or even if they do, it's not without some friction, as all these things happen. So I feel like maybe we portrayed it as if it was like, mergers are, I guess mergers are relatively common, but they don't always work out. And they always is that friction of figuring out the new direction of the company and the assets and all this. And yeah, they do always sell off items because of the cash impact of merging, right? So they always have to sell assets. And a lot of people pointed out how they wouldn't be surprised if Six Flags did sell some of the crown jewels just for cash and all this and that. And of course, we can't comment on that because that's like, that's a prediction. But, basically this is all part of mergers. Like sometimes the mergers, they merge together and they sell off some higher assets in order to reinvest. And sometimes they sell off the lower assets, and it's all, but yeah, I would say that comment. And then we also
I think it's important to recognize too that, we say that mergers don't work. Generally speaking, mergers don't work. I don't necessarily agree with that. I think when mergers happen, we have to stop comparing the new company to either of the old companies. Yep. Because when a merger happens, both of the old companies, in effect, die. They're done. They're gone. They're history. So anybody who is trying to compare what Six Flags was pre-merger and what Six Flags is becoming post-merger, it's not fair. That's the Six Flags, the way it used to be, is done. It's gone. That's why it merged. So it has formed an entity that is completely different, completely unique to either the Cedar Fair company or the Six Flags company. So now what they're doing is that all of a sudden the powers that be and the boards, et cetera, are looking at, well, now we've got all these different assets. It doesn't make sense for us. Of course you're going to sell stuff off. It doesn't make sense for us to own competing parks in the same market. That doesn't make sense at all. And as Philip mentioned, when you have this kind of merger, all of a sudden you've got tons and tons of things. It's sort of like when when you begin to cohabitate with your spouse, and all of a sudden we don't need two gravy boats. Let's
Yep.
sell one of them.
That's right.
It's one of those. We all do it, and it makes total sense. So I think it's unfair to necessarily say all mergers fail or most mergers fail. I think it's probably more accurate to say most mergers become a company that's unlike either of the two that created that merger. Does that make sense?
Yeah, I think that's also a point we didn't do too much last time,
Correct.
which is really thinking about it's not, they had to keep the Six Flags name just because of the brand value that is attached to it. But it almost would have been more helpful if we think of it as like an entirely different company, because I think Scott's point is that it is an entirely new company. And what they're trying to do is rethink their whole value proposition. So it's not about like Six Flags becoming more like the old Busch Gardens it's not about Six Flags becoming more like the Cedar Parks or vice versa. It's about how is this new entity going to survive in a competitive market? And are they going to stay in markets where they have a lot of competitors, or are they going to go for areas where they're not, or are they going to take a more regional approach, or are they going to do Halloween, or are they not, or seasonal, or blah, blah, like seasons of fun? What are they going to do? Who are they? It's a whole new company. I think it's a better way of thinking about it.
Exactly. And they still have to figure, and let's be completely honest.
And they haven't because they've been using old terms from old of their, their old Six Flags terms. And I think I think to this comment, it's about the expectation mismatch that is the problem here.
Correct. But I think there is a logic to using the old Six Flags terms simply because they don't want to diss the few Six Flags patrons that they have. They also have to keep stockholders happy. They also have to keep stockholders engaged, so they can't all of a sudden. It's like turning an aircraft carrier. It's not like turning a speedboat. And you got to look at it from that perspective. And let's be completely transparent and completely honest. If the two companies were on these skyrocketing trajectories to overwhelming financial success, they wouldn't have merged.
Yep.
The merger took place because the independent companies thought that there would be an advantage for those involved, and perhaps those involved at the very highest levels. That's usually where those mergers that's usually who those mergers benefit the most. And I have no idea what their long range game is. Is it to sell off everything that's worth everything and then just shut down the rest of the company? It doesn't appear that way. That's not what their actions have shown thus far. Is it to sell off the lower performing parks or the parks that are in competition with other parks that they now own? Yeah, that may be part of it. But I think we have to recognize, just the simplest summation of this is, we have to recognize that Six Flags now is neither Six Flags before merger or Cedar Fair. It is a completely new company. It has some of the same parts that both of them had, but it also, and some of the same problems. And it has some new advantages and some new problems. So you got to take into consideration that when these things merge, they become a separate entity that is not the sum of two parts. It may be there's a lot that's going to be similar as far as the parks go. Now, do the guests attending the parks understand this? Probably not. But those of us in the industry should.
Yeah, that's true. The other comment we just wanted to call out was there was some talk about United Parks and about people's experiences there, and also about Busch Gardens. And the one that I thought was insightful was mentioning how Busch Gardens Tampa is really leaned into school kid group sales, and that this is the budget crowds that Universal and Disney don't want. And a great insight here, which is, can you build a brand on leftovers? And I thought that's an interesting take on that, which we didn't think about it all, but just, that again, we talked about this for Halloween, but we didn't necessarily talk about it writ large, about how there are these, again, back to what Six Flags had originally said. And of course there's not a Six Flags in this market. So in this market, you do have more room for that. But remember way back when the parks had talked about how they're trying to get out of that budget crowd, because the budget crowd was the one that was causing problems at Halloween. And this is what this comment reminded me of, is like, oh, well, you're like, I don't know how true that is because I haven't been to that park in a long time, but it is interesting for them to point out that that is a market, and whether or not, I mean, and I think it's fair to argue that Disney, you can't because it's too expensive. And I think it's also fair that Universal probably doesn't hit that because it is edging up there also in price. Mm-hmm. So I could see how Busch Gardens Tampa would be the group sale park. Yeah.
Well, Six Flags was the group sales park. I mean, Six Flags was the budget alternative for many years.
Saying, but there's not one in that area. So
and there's not one. Well, and to be, I'm probably telling it's old news now. Six Flags has been trying to buy a park or build a park in this area for many years, and if United Parks did decide to start selling off stuff, there was interest in the past from Six Flags for Busch Gardens Tampa. There have been interest from Six Flags in SeaWorld Orlando, but neither of them have ever developed into anything. But I think, to that point, is it possible to build a brand off of leftovers? Probably not, because that's not the sexiest brand. But is there a business model that focuses on here's something for the people who can't afford Disney and the people who can't afford Universal? Yeah, there's a business model there. Now, is that the business model that Busch Gardens or United Parks wants to follow? That I can't answer because I'm not part of the company anymore. But there is a market there for delivering lower cost, moderate quality experiences. And of course, we all know it. We're not telling tales out of school when we all say that if you look at the board of United Parks, there are some internal challenges and struggles there as well. So that's not new news to anybody, whether you're in the know or not. And so they need to make certain that they get that figured out. I, of course, am hoping and praying that the parks continue to do well, simply because they're so much a part of my early career. But I totally understand your comment. And as far as my opinion goes, there is definitely a business model that can build itself off of leftovers. And if Six Flags is trying not to be that now, or the new Six Flags, the new company, is trying not to be that now, then maybe United Parks can fill that void. Unfortunately, the hard goods of all of these parks kind of precludes that from happening, because there's a lot of high-end operational costs especially for the SeaWorld parks, but Busch Gardens as well, because of its animal component. So we'll see.
Well, okay, we did actually have some Six Flags Saga news this week. We gotta get moving on here. So
yes, enough. But anyway, thank you guys for your comments. Keep them coming.
Yes, thank you for your comments. So in this week's edition of What's Going On with Six Flags, Travis Kelce, Six Flags, they're developing a branding relationship following the Kelce investing. So last week we talked about how Travis Kelce has partnered with a investment group. So he basically just became the face of this investment group, and they bought a 9% share. And then he was talking about how they were going to, interested in helping Six Flags, and because he grew up with them and blah, blah, blah. And we talked a little bit about how, 9% isn't really much. And this is kind of a little bit like an activist play, but it seems like Six Flags is trying to capitalize it, because they were asked about this on their earnings call, and it kind of so basically, this is what Six Flags says. Six Flags is engaged with Kelce's team to work together on a broader branding relationship, capitalizing on Kelce's long history with our parks and his desire to help renew and enhance the fun and excitement he has enjoyed with us for future generations. These discussions come at an ideal time as we continue to invest across our business to modernize our brands, reinforce their longstanding cultural relevance, and build stronger connections with guests. And then they went on to kind of say some interesting stuff about Travis Kelce. Influencers of that ilk have tremendous followings. And I think part of where all of society is going is figuring out, what does the new world look like? Anyway, and then they're back to, we've had dialogues and concepts of a plan, basically. And then what is it? Okay, we're going to work very closely with him and his team to make sure that we optimize the opportunity as you said, the interest is not only the stock price shooting up, but it speaks to how we live in a different world now. I've got trust in our team, and in his team, we know how to work this. So that was a lot of yammering by them, but basically I feel like Six Flags was like, well, he's kind of an influencer and we do want to work with him. But it almost seemed like they were a little bit like, maybe we can use his celebrity to help invigorate the parks by doing some sort of like a branding deal that we don't have to pay for now because he has a vested interest, right? Where like, instead of having to pay him probably more than 9% of what the company is worth, then he's just gonna like help them out, or they'll work with him, or I don't know. It was really weird. And then they went on social media and they posted like a picture of a roller coaster with like Travis Kelce like pasted onto it, like clearly photoshopped like him like in a Six Flags coaster. Yeah.
I think that you're absolutely right. I think that his name affiliated with Six Flags is worth far more than the 9%.
Yeah, 100%. Yeah.
I think that I don't know whether these new plans will progress in a swift manner or not.
Okay. Right.
But I'm sure they'll be tailored to their new business model. Just saying.
Well, we don't have to pay royalties on that, so that's good.
But we're talking. I mean, so let's not. I mean, you can't ignore it. You can't ignore it. Taylor Swift concerts actually have a plate tectonic effect on the cities that they go up in. So if you have control, if one branded human being has the control of that many fans, you want to be affiliated or associated with them in any way you possibly can, and they can't afford to buy her, to lease her. And I don't misunderstand me. I'm not saying that Kelce is like a schlub on the side there. He's got some pretty hefty following as well. Yeah. But the two of them together, could you just imagine if, all of a sudden they did a song and dance show in all of the parks that had exclusive Taylor Swift video?
Yeah.
Could you just imagine what that would do for their attendance?
Yeah. See, I think there is a lot of potential there. So I think they are right about it. Let's just make sure. I just thought it was interesting how that's his line about like, influencers in the ilk and the new world order or whatever nonsense. I was like, okay, I think it's okay to just say like, we want to work with him, but then also just be honest about it. Like, yes, like they have a large audience. And we think that we could potentially tap into that audience in some mutually beneficial way that will help our attendance. That's it. Why you got to be so weird about it?
When you get because again, they don't want to say we're going to ride on we're going to ride on the coattails of his success, and they can't. They don't want to lead with that because that's going to have some negative backlash.
Well,
that's going to have some very negative backlash. But I just thought it was funny as you were reading it. I kept thinking, wow, how 2010 2010 of you.
Yes.
But in fairness, though, parks are finally starting to catch on to the power of influencers. Finally, there are some parks that still their marketing plans are all about how much ad time are we purchasing, how many billboards, how many commercials. They don't get it.
It's baffling.
They don't understand their market in many cases. So
it's baffling, especially if they are like we just talked about. Sorry, we need to move on for 6. But the last thing is like, especially if they are like targeting like that budget or anyone younger in that age range, you're like, this is literally the market that you're targeting with your parks and like, And so anyway, I think that's a unique thing for us.
As Philip says,
Yeah, I just think that that's something that's unique for us in the amusement space because a lot of the markets that we target are younger. And I think that is always a challenge for us in amusement industry writ large is like, that those, again, very trendy, K-pop Demon Hunters, which we won't get to talk about today, but that's a good example of me making sure you're on the trends. But okay. Mm-hmm. Okay. Sorry. Okay. Next story is about the Disney earnings. There's not too much to talk about here, but basically they reported their fiscal fourth quarter earnings on Thursday. It did top analyst expectations for earnings, but it missed on revenue, and that's mainly because of the cord cutting. Basically, the TV networks had a lackluster theatrical film and lackluster theatrical films. So overall, I think it was pretty good. It's just those two are starting to weigh down the company more, and the stock closed down more than 7% after the earnings, which was not good. Operating income for its TV networks dropped 21%. On the flip side, the 39%, the streaming had a rise of 39%. So again, they've been talking about this forever, but it seems like it's starting to accelerate, if anything. And I think this is a point that I had wanted to make. It is just thinking about how really we're chasing a smaller screen now. So if your business at all relies on making stuff for larger screens, it's probably not good. It's smaller screens is where it seems like the audience and the money is at. And I think this has caught both Comcast and Disney off guard, because previously, before Epic, we were talking about how it was catching Comcast off guard, how quickly the cord cutting was eroding. It's like they thought it was going to be here, but it's starting to go like this, right? And it's starting to just go accelerate. And I think that also caught Disney off guard, where they didn't have a fancy new theme park to open, and so it caught a little bit off guard, having an accelerated amount of cord cutting. And both of them, have made bets in streaming, and Disney Plus has been paying off. But it's always the question of is it going to pay off fast enough? And if it's not going to pay off fast enough, then what are you going to do to replace that revenue? But on the good side is that Disney Plus reported nearly 200 million subscribers, which is great. And remember the ESPN app that they have been working on. They talked a lot about that, and think that, executives touted the recent launch of ESPN's direct-to-consumer app, which brings all the content from linear TV networks to streaming for the first time. They said this didn't cause more cable bundle losses, and instead it led to more overall users and engagement. Bob Iger called the ESPN app a positive step for the future of ESPN, notoriously known for one of the few channels holding the cable bundle together. So ESPN's results are reportedly separate from the entertainment TV network. So that's all, again, back to they're trying to rapidly shift. So I think now they've decided the TV bundles are running too quickly. So they're pushing the ESPN app, which is, just like with Comcast, it's a matter of can you switch your business model fast enough before it erodes. The last thing I wanted to share was there was a really insightful post. Of course, I always read the earnings and listen to the earnings, but then I always like to read what all the other analysts are saying, especially ones that are not in our industry, to see what other people think of our industry. And it was interesting. I found one, Chris Colombo, that had a great tiny little chart here, which is hilarious. He said, basically, the new model is that IP that lives across screens and spaces and monetizes at every step. And it starts in the mid-budget movie now, like a smaller budget movie, then makes a huge streaming wave, then goes into retail, then goes into character momentum showing up in parks. And we've been talking about this forever, because that's the classic, Disney flywheel. But I think what is changing here is thinking about the input still needs to be a good story, but not necessarily a big budget. And that's because you're making it for a smaller screen. You're not making it necessarily for movies anymore or for broadcasting. You're making it for people watching on their smartphones, because a lot of people just watch on their smartphones. And I think that was an insight that I was like, oh, interesting. And we won't get to talk about Netflix House, but it plays exactly in Netflix House.
Yeah, it's interesting, because I just had a meeting with a local film and video production company that I've worked with before, and they're branching out. They do a lot of corporate stuff, but they're branching out into. They've just sold their first major motion picture, and they're very excited about future projects. And this is the same company that I've worked with before. Either I've hired them to produce stuff for live experiences, or they've used me as an actor from time to time. But I told them, I said, and in our meeting, I said, look, here, you got to think about it this way. Stop thinking about you're a company to make movies. Think about you're a company to build IP. because it's not about the movies. It's not about the movies. It's, people don't go to movies, and even people who have never seen K-pop Demon Hunter recognize it when they see it in the stores. They recognize it. Even if they haven't watched it, they know it.
Yep.
So it's all about building the IP. And it used to be, back in the day, it was, let's create this really impactful film, and then we'll outsource these characters, bring them into the real world. That's how both Disney and Universal Studios started, was so that you could live the movies. You could actually participate in the characters that you saw on the two-dimensional screen. But the world is moving too fast for that. So you've got to now make it so that they all give birth at the same time. Yep. So you're building IPs, not making movies.
Yep. Okay. All right. We have to get to this last story really quick.
Herschend.
Yes, Herschend. I just realized I did not talk at all about the parks, but I don't think we necessarily need to. The only thing that Disney mentioned about their parks in the earnings is that Disney experiences, so the theme park sector of Disney, which is so funny because it's just so funny. Sometimes I forget about the theme park section, even though that's our business of the Disney earnings. And also, I still think that Netflix should buy Disney, because let us not forget how much larger Netflix is when compared to Disney, and they could buy it with just their free cash flow. So anyway, they probably just should buy Disney and be done with it. So anyway, so the theme parks did really well. They saw an increase of 13% compared to Q4 of last year. Domestically, they grew 9%. And basically, they're saying it's because of Epic Universe. On the earnings call, they said, we've talked about Epic Universe in the past, in particular, as something that we knew was going to be a factor in domestic parks. And in fact, it was very much in line with our expectations. If anything, it seems to be impacting the rest of the competition down in Florida more than it's impacting us. From a consumer perspective, we certainly feel good about it. They went on to say, we are pleased with these results and encouraged by the continued resiliency of our domestic parks. So, and let's see, it said most of the uptick comes from spending inside the theme parks, as well as they also had the Disney Treasure launch. But basically, it's that wave we talked about.
And we've, that's just reinforcing what we said when Epic was, just about ready to open. It's my guess is that all the parks in Florida are seeing an uptick of some sort. They may not be seeing the one they anticipated, but Disney, it makes the most sense because, of course, they are the most relevant. My guess is people are going and staying at Disney and visiting Epic on a day. That Epic becomes a day trip, but I don't know.
Well, United Parks and Resorts reported a 6% decrease in revenue and 3% decrease in attendance. So I think it's more like that's exactly what Disney actually was. More like, this is what happened. Disney, they were like, what do you think about United? Or what do you think about Epic Universe? Disney was like, we think it's great because we're doing great and it's helping us, but it's not helping everybody. And then they're like smugly smiling and they're like pointing to the other parks. That's what's happening.
And that's kind of unnerving for United Parks, because that means they're, from a guest standpoint, they're no longer placed in the same category as Universal and Disney, which is what especially the Orlando parks have been trying to do for years. So that's a little unnerving for them.
Okay. Sorry, Silverwood. Dan. Oh my God. Okay, we got to get. Okay, we got it. So Herschend is acquiring Silverwood. Many thought that we should have started with that news, but here we are. So the theme park owner and operator Herschend signed an exclusive term sheet to acquire Silverwood Theme Park in Idaho from the Norton family, who have operated the park since its founding in 1988. This is more than a business transaction. It's a continuation of a legacy, says the Herschend CEO, Andrew Wexler. We are honored that the Norton family has trusted us to carry their vision forward and excited to welcome Silverwood hosts and guests to Herschend. I could not think of a better, this is going to go well.
After we've just said mergers and acquisitions never go well, except this one.
Well, this isn't a merger. This is a pure acquisition.
This is a
and I think in this case, we know that Herschend does well. Everybody, that's the other thing everyone in our comments agrees with, is that Herschend is like the best quality. It's like up there in terms of the best quality of all these parks. And a lot of people were saying they wish Herschend would have bought the Cedar parks, but they're small. It's a small chain, but
Mm-hmm.
I think they will handle this well, as they have handled the previous acquisitions well.
Yeah, and I think it's also good that it's Hershend because, again, family park. And I think part of the reason that they could get that agreement was because the family park talked to Hershend, which is very family-oriented, very family-based to begin with.
Yeah.
And I'm guessing that the Norton family felt that they could sell this park to an organization that will continue to run it the way they want it run, with the same level of guest experience. And so I think this is a great move. I think it's good for Hershend. I think it's going to be great for Silverwood, quite honestly. So we will see, fingers crossed. All right. Well, that's all the time we have. Philip and I are going to immediately finish this show and dive into our Patreon show. We're going to dive into Unhinged. And my guess is, well, probably because we're both just crazy pulling our hair out, trying to figure out what we can do for IAPA. My guess is we're going to chat a little bit about a pre-IAPA, what the hell do we need to get done in that. So if you'd like to subscribe and hear our craziness before we dive in, and if you are attending IAPA Expo, please stop by on Tuesday at noon, stop by the Haunting Grounds and chat with Philip and I, because we will both be there presenting Marketing the Monsters, which is a whole session, a whole talk about how to differentiate your marketing plans from your day product to your haunt product, and why those are very different and how important they can be. So we're very excited to talk about that. It's one of the few times, actually it's the first time Philip and I have ever actually spoken together at IAPA, and we're really looking forward to that. So please stop by and say hello. But we are out of time. So on behalf of Philip and myself, this is Green Tag Theme Park in 30, and we will see you next week.